Hey everyone, this is iamyourcryptonite, and today we're covering Chainlink Part 1, as well as a little bit about DeFi arbitrage. So let's get started. This article was back from August 1st, and I am going to start reading. The Chainlink overview that's going to be published, again, it's going to be in two parts. This is part 1. We're also going to be covering the Monte Carlo DEX price changes, CryptoPunks, and e-commerce quick updates after Amazon blew up. So, Chainlink Overview, Part 1. Chainlink Overview, Part 1. This is going to be a rather simple update for Part 1. We assume you know nothing about Chainlink and we'll get you up to speed. The second part may take a whole post, but everyone needs to understand the basics first. Besides, we own a large chunk of it and haven't covered that well, so primarily focus on ramping everyone on Bitcoin and Ethereum. This is a Chainlink overview. Chainlink is a decentralized, permissionless Oracle network enabling smart contracts to consume external data from any source. So we can go through this little technical bit. The price was $13.88. It was last updated July 23rd, 2021. Here's a bit about the protocol overview. Actually, I'm going to skip this. I'm going to leave this in the video, so if anyone wants to read through it, they can, but I'm just going to go ahead with the article and read about it in simple terms. So assume you and your buddy want to bet on the price of Bitcoin by year end. And one guy says 50K, the other guy says 100K. Whoever is closest wins. Assuming the price ends at 90K, person 2 wins, since 90K is closer to 100K. For the example, we'll go ahead and make it simple and say it ends the year exactly at 100K. No doubt person number 2 wins. In this case, the only risk is the guy doesn't pay person number 2. Luckily, that is already solved with a smart contract. Now, we can make this transaction more complicated. Say the price of Bitcoin hits 75K and $1 on US exchanges, but is $74,999 on other exchanges, which gets us to exactly 75,001 cent. Just an example again. In this case, person 2 still wins, but there is potential for error. The error can be caused by the decision on which price is correct. So in the normal world, we trust intermediaries. If the price lands on 75,000 and $1, that is the book exchange we are betting on, and person number 2 wins. If the price lands on $74,999 on the book exchange we're betting on, person number 1 wins. So how does this relate crypto world and Chainlink? Now you should see the value of Chainlink. Chainlink is a decentralized answer to this problem. Usually we're forced to trust one book exchange, but in this case we can use an oracle to determine the price. So let's go back to the example. If we decide that 100K or a 50K bet will be based on the average price of all exchanges, then we can prove this is true by using the network to determine the official price, which is exactly $75,000.01. In a sentence, Chainlink is bringing real-world information to a smart contract, which will allow us to remove the middlemen at a faster rate. So, here is the Chainlink token. Chainlink is a utility token. As such, its value is linked to the usage of the token and the amount held by DeFi decentralized apps held and deposited by node operators. So, this is a node. The node retrieves external data and sends on-chain to DeFi apps, decentralized apps, which then sends an on-chain request to Chainlink, which is an Oracle contract interface, and the request triggers a Chainlink node. Again, the node retrieves external data and sends on-chain. That's how Chainlink works. So a summary, fees. Chainlink is a medium of exchange to pay Chainlink nodes for Oracle services. Data requesters may also specify an amount of link that all nodes must deposit as a penalty fee for not fulfilling the request. In Chainlink 2.0, link can be staked by nodes to provide additional crypto economic security. And number 2, the supply. Max supply 1 billion link. Currently almost 500,000 circulating supply. Circulating supply increases based on link needed to incentivize the network. No set inflation schedule. For those where visuals are better, you can see that DeFi apps and Chainlink are intricately linked. DeFi apps need good oracles, otherwise you will have a huge issue when the contracts execute, because the information is not there, or it's faulty, or it's contradicting. So this is a graph of the Chainlink price, volume, and key events. It started off below $10, October 20th, verifiable random function enabled. Things are pretty chill. It starts increasing during DeFi winter. February 21, off-chain reporting launches. March 21, Chainlink announces 39 new integrations. April 21, 2021, for everyone wondering, I'm not saying the 21st. Chainlink 2.0 white paper is released. In June 2021 launches Open Beta of Keepers, a smart contract DevOps service. Interesting. So unsurprisingly, as interest in DeFi, NFTs, and crypto broadly increases, the volume of Link goes up. It's a trading volume. This makes sense as more people use it and understand it. It's not been immune to the standard boom and bust of crypto prices though. So who are the team and contributors? Team. Number 1, there's the co-founder Sergey Nazarov. He was previously founder at Crypto Mail, Decentralized Service, and Secure Asset Exchange. Number 2 is co-founder Steve Ellis, who was previously team lead at Pivotal Labs, securing sensitive medical data, HIPAA compliant. Number 3, Chief Scientist Ari Jules, formerly Chief Scientist and Director of RSA Laboratories, professor at Cornell University. Number 4, VP of Engineering Ben Chan, formerly BitGo CTO and architect of WBTC. And number 5, the advisors are Tom Gonzer, who's the founder of DocuSign, Evan Chang, Director of Engineering at Novi. Novi is the crypto arm/branch of Facebook, or within Facebook. Decentralization. Number 1, centralized organization. The parent company, Smart Contract Chainlink Limited, and number 2, Smart Contract, is owned by Chainlink co-founders. Number 3, code released under an open source license. And number 4, 1 billion Link allocated as 30% to parent company Smart Contract, 35% to investors, 35% for ecosystem rewards, which is for the node operators. And number 5, protocol decision making is not decentralized. Pretty centralized, I guess. Innovation. Number 1, Chainlink makes use of an innovate decentralized Oracle network, Dawn, to solve the Oracle problem and has over 30 nodes. Number 2, Deco, for confidential proof of website data invented by Ari Jules and acquired by Chainlink. Number 3, Chainlink was built on Ethereum. Chainlink is actually blockchain agnostic even though it was built on Ethereum. Okay, let's talk about community. So, number 1, many of Chainlink supporters are strong vocal advocates of the protocol and include many leaders in crypto. Number 2, growth of Chainlink is driven by its ability to onboard more decentralized applications and thus driving more queries, giving Chainlink providing a unique marketing advantage. Usage growth. Chainlink responses are driven by market volatility and the number of smart contracts and dApps making requests. Volatility can drive a major uptick in responses, as seen during the week of the May 18th crash in the daily response chart. In recent months, overall DeFi activity has decreased, resulting in a substantial decrease in responses. Despite the rapid fall, Chainlink continues to be the dominant Oracle network. So these are the daily Chainlink responses. This was a spike on May 18th. It's quite interesting to see the large drop in interactions with DeFi. Currently, from a macro perspective, it seems that there is still a large focus on acquiring stables. We're not sure why, as stablecoin returns are unlikely to beat the printing press, which is up 30%. Ethereum wallets interacting with DeFi. In May, 500, so 500,000. In June, 280. July with 191. Interesting. Weekly responses by month, 109, 80k for June, and then 40k for July, all in 2021. All right, now that we talked about Chainlink and basically how important it is and how it connects everything, let's talk about Arbs in DeFi. So, an automatic market maker, AMM arbitration. Think of this as a digital coin flip. If you knew you could buy an item at Target for $10 and then sell it by walking across the street to another store, you do it. Now, if you had to pay $2 for the transaction, you would not. You lose that $1 in that scenario. Therefore, an Arb in crypto terms is when the market is not pricing the asset correctly across all pools. Currently, this does happen in imbalances and automatic market makers occur. So here's a clear example of an Arb. Number 1, token proportion imbalance. This is a result of somebody removing one asset from the pool by overbuying or overselling. Every buy or sell has predefined slippage. So a large buy or sell will cause an arbitrage for someone else that needs to close. Number 2, price differential. We know that most of the large liquidity is on a centralized exchange. So if there is rapid movement on a centralized exchange, the decentralized exchange prices won't be the same. Decentralized exchange AMM pools are ratios of token A to token B, following a deterministic curve. This also presents an Arb. If token A has diverged significantly in price from token A, now the dumb ratio is not correct. Okay, so here's a note. Liquidations usually flow directly into a decentralized exchange, which makes both 1 and 2 worse. As more tokens are forced sold, the price drops even further, both in token imbalance and price differential. Most of the Arbs exist on smaller DEX AMM and sidechains. So now that you know how it works, here's what you should be doing to collect these Wi-Fi tokens. Step 1, have tokens on every chain. Step 2, short long futures temporarily to lock in the Arb. Number 3, eventually with enough time, you can bridge the assets over to another chain, or the price stabilizes on the chain that you're on. The easiest way to do this is to wait for volatility and watch stablecoins trade at massive discounts premiums. In this case, massive would mean 5%. This would be like trading $1 US for $1.05 US dollars. Even with the gas fees, you're going to print money. Eventually, Arbs will remove these opportunities. However, they are abundant during times of volatility as the infrastructure is not built out. Let's talk about Monte Carlo DEX. So unless you're trying to purposely lose money, you're up quite a bit in Bitcoin from the high teens to $20 moving to $30, while Bitcoin fell apart from 60K to 40K. Assuming you're calculating your investments correctly against Bitcoin, you're in great shape. So here's the reasons why. Incentives. The vesting schedule gives you clear line of sight to an eventual catalyst. The issuance is smart as it drives interest and volume in the project. Okay, I am a longtime reader, but I think I may have missed something because I don't know what's going on with the MCDEX DAO. I don't know why they included this here, so I'm just going to continue reading. So what to do now? Pretty simple. It depends on who you are, and we'll break it into 2 buckets. Number 1, for the people who were having a panic attack at $15, you should sell everything. All of it. This is because you invested too much. It means that you're measuring your value in US dollars, and on top of that, you probably bought too much relative to your net worth. Convert it back to Bitcoin you use, and you'll be up. Number 2, for people who are excited by the price move up, you should sell your principal in Bitcoin terms. This means you also invested too much and are excited. Excitement usually leads to terrible decisions. If you're excited, you're better off owning a small position for free. Number 3, for the people who don't care like us and didn't even know the price change happened, you can keep it. It means you didn't invest a boatload of money and are happy if it goes to $45 or back to $15. So what are we doing? Nothing. It isn't a sizable position, so there is no reason to cut or buy. Although we did learn that our Twitter account is large enough to detect bull and bear reactions. When people message upset, we should be buying more. And when people message excited, probably best to sell. We're going to build a tracker for this now and see if there's an accurate emotional indicator for the markets. Okay, let's talk about CryptoPunks. Prices are skyrocketing again. 3 Arrows Capital bought 100 punks. Update on this didn't end up being 3 Arrows Capital. Wow, they only bought 10 punks and they're coming for art blocks now. Either way, it's great for the floor price, and anyone involved is getting rich in a heavily illiquid market. The good news is, if you're smart, you can sell your punks OTC and avoid showing your cards. For example, if you own 5 to 10 punks, many people do, I do not, you can go ahead and get rid of 1 or 2 over the counter. This will lock in your gains while you maintain anonymity. Before people try to move the price of punks up and down, there's a quick word of caution here. Do not spend more than 3 to 5% of your net worth on NFTs. If 3 to 5% of your net worth cannot afford a high quality NFT, then simply stick with the major items we talked about here on Bull, risk mitigation. So Amazon e-commerce miss. We're sure you guys probably heard the news. Amazon missed Q3 pretty badly and the stock sold off. This isn't surprising to anyone in the e-commerce space, as July 4th reopening really put the clamps down on e-commerce. And this, of course, is temporary. For those wondering how analysts got this wrong, we can add some more value here. You already know the scams related to this one, but here's another one that showcases how Wall Street thinks. Since there is a new CEO, many people on Wall Street believe that the first print and guide will be amazing. They ignore all fundamentals and go with how they feel. Their belief is as follows. If a new CEO or a new CFO comes in, 9 out of 10 they will offer better numbers to make the new CEO CFO seem like he's great. Unfortunately, this logic doesn't work for successful companies. Successful companies don't care about appeasing Wall Street analysts, and they don't care about the hedge fund industry. They focus on what matters, building a real business and obtaining long-term investors who don't nitpick pennies in a quarterly earnings report. In short, e-commerce saw a slowdown due to the pandemic, and good companies don't care about the opinions of Wall Street analysts. And will there be an e-commerce rebound? As we've mentioned many times here, we think you can get a good deal on a new project in around 2 months. And you can feel the fear and pain coming from guys who have hit their first roadblock. There should be a high quality e-commerce businesses to buy over the next 2 to 3 months. By the end of Q4, you should see a real pickup in e-commerce again as inflation starts to put real pressure on retail businesses. Again, as closing, none of this is financial or legal advice, purely entertainment and opinions of both Bull and myself. Please subscribe to them so that you can read these as soon as they come out, and subscribe to me so that you can watch these videos recapping everything if you don't have time to sit down and read this article. So I will see everyone in part 2 of Chainlink.